Welcome to Simple Investing Secrets. In this video, we take a look at the top 15 cheap quarterly dividend stocks to buy now. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. When looking for cheap quarterly dividend stocks, it's important to consider several factors, such as the company's financial stability, dividend history, payout ratio, and growth potential. Some companies may offer higher dividend yields but not have the financial stability or growth potential to sustain those dividends over the long term. Quarterly dividend stocks are stocks that pay dividends each quarter. Companies pay dividends as a way to return excess capital to shareholders. When times are good, many companies will raise their dividends if their profits go up a lot. In more challenging or difficult times, company profits could decline or go negative, and many companies will cut or suspend their dividends. Cheap stocks are stocks that trade for below what they normally would be worth for various reasons. Given that what is an attractive valuation can change depending on a stock's specifics, sector fundamentals, and broader economic factors that change all the time, there isn't a single indicator such as forward PE that tells whether a stock is cheap or not. Instead, the best cheap stocks to buy are arguably blue-chip stocks with substantial competitive advantages and growth potential that are trading at fair or low valuations. Blue-chip companies are established businesses with well-known competitive advantages that are generally pretty profitable. Given the recent failure of Silicon Valley Bank and several other banks, the stock prices of many leading blue-chip stocks in the financial sector have declined. As a result, some leading financial blue-chip stocks that are the leaders in their sectors could be trading at attractive valuations in the long term if economic conditions normalize. Financial stocks may have near-term downside risk, however, if more banks fail or if the economy slows more than expected. Some companies like Microsoft Corporation and ASML Holding have higher forward PE ratios, but their stocks are still thought to be cheap because they have a lot of room to grow, thanks to the growth of AI. Goldman Sachs says that at some point in the future, productivity gains could help AI raise the annual global GDP by 7%. If AI keeps getting better, it might be able to increase production and services even more in the long run. Due to the potential of AI, there will probably be a rise in the demand for the semiconductors required to power AI. ASML Holdings, a manufacturer of crucial semiconductor equipment that is at least several years ahead of its rivals, will probably profit from the rise in demand. Similarly, Microsoft Corporation will likely benefit from the growth of AI given that it can incorporate AI into much of its software to make it more useful. Microsoft Corporation can also benefit from AI given that it owns a leading cloud business that can power many AI applications as well. AI like ChatGPT currently still makes mistakes, which limits its effectiveness, but the AI is improving and will improve further in the future. Given that any sector can change substantially in the future and any single company can fall behind for a variety of reasons, it could be a good idea for long-term investors to own a well-diversified portfolio of leading stocks across many different sectors. With that said, let's take a look at the top 15 cheap quarterly dividend stocks to buy now. Number 15. Gilead Sciences, ticker GILD. The dividend yield as of March 2023 was 3.46%. Gilead Sciences Incorporated is an American biopharmaceutical company headquartered in Foster City, California, that focuses on researching and developing antiviral drugs. Gilead stock is undervalued, with shares trading about 11% below our fair value estimate of $97. The company generates outstanding profit margins with its HIV and HCV portfolio, and its portfolio and pipeline support a wide economic moat, says Morningstar strategist Karen Anderson. The company has steadily increased its dividend over time, with a payout ratio of around 50%, which Anderson calls reasonable. Number 14. The Southern Company, ticker SO. The dividend yield as of March 2023 was 3.92%. The Southern Company is a utility company that ranks number 14 on our list of 15 cheap quarterly dividend stocks to buy. As a leading utility, the Southern Company has a relatively stable business that has allowed the company to pay a quarterly dividend either equal to or greater than the previous quarter for 3/4 of a century. The Southern Company has also had sustained dividend increases for over 20 years, giving it a dividend yield of 3.92% as of March 29. As of the same date, the Southern Company has a forward PE of 17.22. Although technology changes could eventually mean the Southern Company might have to change its business model in the long term, especially in natural gas distribution. The company's adjusted earnings are expected to grow in the medium term given its $43 billion capital plan and 97% total projected capital deployment over the next 5 years at its state-regulated utilities. Number 13. Duke Energy Corporation, ticker, DUK. The dividend yield as of March 2023 was 4.18%. Duke Energy Corporation is another leading utility with a fairly high dividend yield that's trading at a fairly attractive valuation given its fundamentals. As of March 2023, Duke Energy Corporation had a forward PE ratio of 16.09 and a dividend yield of 4.18%, giving it a lower valuation and a higher dividend yield than its peer, the Southern Company. Long-term, Duke Energy Corporation's business model may need to change given technology changes that could affect natural gas distribution demand. Number 12. BlackRock Incorporated, ticker, BLK. The dividend yield as of March 2023, 3.04%. BlackRock Incorporated is a leading asset manager with a 3.04% dividend yield as of March 2023. Given the decline in many financial stocks in recent months, BlackRock Incorporated is trading for a forward PE of 16.47 despite its further growth potential in the future. In the last 5 years, the company has had an aggregate of $1.8 trillion in net inflows, ranking among the top in the industry. Given its earnings growth over the years, BlackRock Incorporated has increased its annual dividend for 14 straight years. Number 11. Blackstone Incorporated, ticker, BX. The dividend yield as of March 2023 was 5.17%. Blackstone Incorporated is the largest alternative asset management company in the world. It has good margins and a strong ability to make money. Since the beginning of 2022, Blackstone Incorporated shares have declined due to higher interest rates, which make buying companies harder with debt. With weakness among some regional banks in recent months, the commercial real estate market could face headwinds, and the weakness could potentially negatively affect Blackstone Incorporated in the near term as well. While the near term is uncertain depending on how the economy and markets do. Blackstone Incorporated is attractive in the long term given its high-quality business, a forward PE ratio of 13.6, and a dividend yield of 5.17% as of March 2023. Number 10. The Bank of New York Mellon Corporation, ticker, BK. The dividend yield as of March 2023 was 3.28%. The Bank of New York Mellon Corporation is a leading asset management firm whose stock declined in March given the weakness in many leading financial blue-chip stocks as a result of the failure of Silicon Valley Bank. As a result of the stock's decline, the Bank of New York Mellon Corporation arguably trades at a cheap valuation given its attractive business, forward PE of 8.33, and a dividend yield of 3.28% as of March 29. The Bank of New York Mellon Corporation has raised its annual dividend for 11 straight years, and the bank has long-term growth potential if the broader market recovers. Number 9. ASML Holding NV, ticker, ASML. The dividend yield as of March 2023 was 1.51%. ASML Holding is a leading semiconductor equipment manufacturer that is at least several years ahead of its competitors in making UV lithography systems, which are essential for making advanced semiconductors. Although ASML Holding has a forward PE ratio of 27.25 and a dividend yield of 1.51% as of March 2023, demand for advanced semiconductors is expected to grow substantially in the long term. Demand for ASML Holdings products could also grow substantially if it maintains its market share, making the stock cheap in terms of its long-term potential. Number 8. The Home Depot Incorporated, ticker, HD. The dividend yield as of March 2023 was 2.95%. The Home Depot Incorporated shares are down over 10.29% year to date and have a forward PE ratio of 16.85 as of March 2023, given the sluggish growth expected in the home improvement industry this year. As a result of the sluggishness, Home Depot Incorporated expects sales growth and comparable sales growth for fiscal 2023 to be approximately flat compared to fiscal 2022. Despite the headwinds, the Home Depot's board of directors authorized a 10% increase in the quarterly dividend to $2.09 per share in February 2023, which equates to an annual dividend of $8.36 per share. Number 7. Oracle Corporation, ticker, ORCL. The dividend yield as of March 2023 was 1.77%. Oracle Corporation is a leading enterprise software company with a forward PE of 16.24 as of March 2023 and has in recent years benefited from the growth of its Oracle Cloud infrastructure business. While the company's cloud business could have more long-term growth given the increase in demand for AI processing, its business could be disrupted in the near term if the U.S. Congress bans TikTok, which uses Oracle's cloud for its U.S. traffic. Oracle Corporation may also have an opportunity in TikTok in that the company is large enough to potentially bid for it. Number 6. Lowe's Companies Incorporated, ticker, LOW. The dividend yield as of March 2023 was 2.19%. Lowe's Companies Incorporated is another leading home improvement retailer that is trading for a fairly low valuation given the quality of its business and its growth potential in the long term. As of March 2023, Lowe's Companies Incorporated had a forward PE of 13.03, making the stock potentially attractive in the long term if demand for the home improvement retailer's products grows again. In Q3 of 2022, Lowe's was one of the stocks with the biggest buybacks. Number 5. The Procter & Gamble Company, ticker, PG. The dividend yield as of March 2023 was 2.49%. The Procter & Gamble Company is a leading consumer staple with a forward PE of 23.19, which doesn't seem cheap. Still, the Procter & Gamble Company is probably a good deal in the long run, since its profits could grow once inflation gets back to normal. In the near term, however, the company faces potential inflationary and economic headwinds. Number 4. Goldman Sachs Group Incorporated, ticker, GS. The dividend yield as of March 2023 was 3.12%. Goldman Sachs Group is a leading investment bank that also has a pretty sizable asset management business. As a result of the weakness in leading financial blue-chip stocks after the failure of Silicon Valley Bank, Goldman Sachs Group Incorporated stock has fallen to trade for a forward PE of 8 as of March 2023. With a lower valuation, the company's quality investment banking and trading segments, and its normalized earnings power, Goldman Sachs could be cheap in the long term, even if it might have near-term downside risk if the financial sector weakens further. During its investor day in February, the company said it is considering strategic alternatives for its consumer platforms business, which hasn't done as well as expected. Number 3. JP Morgan Chase & Company, ticker, JPM. The dividend yield as of March 2023 was 3.10%. JP Morgan Chase & Company is the largest bank in the United States by assets. Its shares have declined given the weakness in leading financial blue-chip stocks after the failure of several regional banks. Nevertheless, JP Morgan Chase & Company likely benefits in the long term, as some deposits likely moved from regional banks into JP Morgan Chase & Company as a result of regional bank weakness. Bloomberg recently reported that the FDIC is considering making the biggest banks in the U.S. pay more in terms of their share of the smaller bank failure costs, which currently are around $23 billion. As of March 2023, JP Morgan Chase & Company had a forward PE ratio of 9.6. Number 2. Bank of America Corporation, ticker, BAC. The dividend yield as of March 2023 was 3.07%. Bank of America Corporation is one of the largest banks in the United States and has a forward PE ratio of 7.87 as of March 2023. One reason for the low valuation is that Bank of America Corporation has $109 billion of unrealized losses in the held-to-maturity bond portfolio, according to Barron's. In the long term, however, Bank of America Corporation is likely cheap given its normalized earnings power and growth potential if it can maintain its market share. Number 1. Microsoft Corporation, ticker, MSFT. The dividend yield as of March 2023 was 0.97%. Microsoft Corporation ranks number 1 on our list of 15 cheap quarterly dividend stocks to buy. Although it has a forward PE of 26.1 as of March 2023, Microsoft Corporation is cheap in the long term if it can capitalize on its AI potential. Microsoft Corporation reportedly owns 49% of OpenAI, which makes the popular ChatGPT. Although ChatGPT makes mistakes, Microsoft Corporation has incorporated it into Bing, giving it the potential to increase market share. Also, Microsoft Corporation runs the second largest cloud computing service in the world, which could use more AI processing. This concludes our list of the 15 cheap quarterly dividend stocks to buy now. As always, it is essential to do your due diligence before committing your hard-earned cash to buy stocks or invest in the market. Which of these 15 dividend stocks would you consider adding to your investment portfolio? Let us know in the comments below. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.